General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work. Today is the 25th. It's Tuesday. More of an accumulation day. Sideline was the stance. Confidence level medium. Reason being price delivery signature seen. It was an inside day on Nasdaq, and you can tell we waiting on Nvidia earnings. You can just tell the market's not doing anything. Anchor point confirmed. Expansion playing out. No. We expecting that anchor to form on Wednesday, probably during the earnings. Index Nasdaq up 0.66%, S&P 0.32%, Dow 0.30%. Tech led the bounce after Monday weakness. Nvidia gained about 2.2%. Meta nearly 2%, AMD 4.9%, and the semiconductor index gained 1.4%. Rates helped to rally. The 2-year fell 6 basis points. 10-year fell 8 basis points. The 30-year fell 5. I don't really think the 30 years is important. The market is digesting the Besant Treasury expanded long bond buybacks, which have been helping relieve some of the recent yield pressure. Lower yields equal a friendly environment for Nasdaq growth. Oil gave equities another tailwind. WTI dropped more than 3% to 82 as traders decided the new Iran sanctions were less threatening to actual oil supply than feared. That took some of the inflation rate pressure out the market. And it's midterms. They ain't trying to have oil go up. Seasonality wise, oil should be going up for the summer. Economic data was actually soft. July new home sales dropped 10% below expectation, while August consumer confidence fell. Consumers ain't gonna be happy. So the economy gave a slightly softer growth signal, which also made the drop in yields easier to justify. Okay, breadth was legitimately positive, not just 5 mega cap carrying everything. Advancers beat decliners roughly 1.71 to 1 and 1.61 to 1 on Nasdaq. That's pretty good. But volume was only 14.3 billion shares versus 16.4 20-day average. So participation wasn't especially aggressive. Nobody showed up. Nasdaq. And sat on this volume and balance. Nice respect. No body closures. But it still was basically just an inside day. We didn't even get the fair value for buying. Funny looking chart, but I would favor in the highs first. I wouldn't call today a major information day. The market is setting up for the real test. PCE and NVIDIA earnings Wednesday, August 26th, followed by Fed Chair Kevin Warsh at Jackson Hole Friday. NVIDIA options are pricing roughly a 5.4 post-earnings move. So tomorrow can materially change the NASDAQ story. So yeah, 5% on NVIDIA is crazy. Go to M15. And this is what I'm noticing. Like we create this range and stay inside. Create this range and stay inside. And while session did the same move, create a large open range and rotate inside of it. Look at gold. Finish the doji. Pending close above previous day high could be time for internal range liquidity. Retracement seeking balances. The daily fair value gap could be a good target. So right here, which ain't really that far. It's on the H1. Watching this area, especially since we ran it too. I think we can run this high and then come to this daily fair value gap. We can take the high first just to stop all the early sellers and then retrace to the daily fair value gap before hitting higher. If we just retrace to the daily fair value gap, then I'll just wait for after the news to engage and look for a buy. So PCEs tomorrow. We ain't gotta wait for NVIDIA with gold. Should be able to get some action. NASDAQ, you probably gotta wait for NVIDIA. It's the M15. Kind of a nothing day. Monday was pretty much a nothing day, but we are setting up with a cool little rally. They can take the high first, then probably run these lows, then back higher. Stock charts, okay, NVIDIA, pretty much the same as NASDAQ since it's the heaviest stock anyway. We're going to H1. Relief rally day, waiting the big earnings tomorrow. Go to M15. Says since we not at all-time high, I don't know if we would sell off the earnings below the 200. Yeah, we could rally rest of the week, being that we still under the weekly open, while NVIDIA as a company is making John D. Rockefeller moves with his business. Yeah, he taking over. He doing monopolistic moves. So for NASDAQ, we could just pump tomorrow after NVIDIA. Still watch Tuesday low. I don't know if we need Monday low. Or we could pump NVIDIA and then they sell off and we just kind of do nothing on all three charts I'm looking at. Did the framework play out? Yeah, we're starting to see the weekly cycle come back into play where Monday, Tuesday create the range and Wednesday does the purge and revert. What did we learn? Timing for the week. We're seeing how New York sets up to do nothing range for the day and rotates internally. Tomorrow, PCE and NVIDIA. Alright, that was it. Alright, y'all have a good day.